Understanding cash flow and wealth building. Positive cash flow is the foundation of financial happiness. It happens when your monthly income exceeds your expenses, which gives you the freedom to save, invest, and build a more secure future. On the flip side, negative cash flow is when your expenses surpass your income, leading to financial stress, debt, and the feeling of being trapped in a constant struggle to make ends meet. This is why maintaining positive cash flow is so closely tied to personal happiness and peace of mind. To achieve positive cash flow, the first and most essential step is living within your means. It's all about resisting the urge to inflate your lifestyle as your income grows. For instance, if you're earning $60,000 a year, it might be tempting to spend like you're making $80,000. However, this will quickly lead to financial difficulties. Instead, aim to live on much less, like you're earning $40,000. By minimizing unnecessary expenses and keeping your payments as low as possible, you create breathing room in your budget. This surplus allows you to build savings, make strategic investments, and most importantly, stay financially flexible and secure. This strategy not only ensures stability, but also reduces anxiety, knowing that you are prepared for unexpected events. Living below your means. Living below your means is not just a frugal mindset, it's a proactive financial strategy. When you earn $60,000, but choose to live like you earn $40,000, you're setting yourself up for long-term financial success. The goal isn't deprivation, it's about maximizing the gap between income and expenses. That extra gap becomes the engine that drives your wealth-building efforts, whether through savings, paying off debt, or making investments that generate future income. Think of it this way. Living below your means builds a financial safety net. When you maintain this surplus, you're not just preventing debt, you're giving yourself the freedom to seize opportunities. Whether that's buying a home, starting a business, or making an investment, the money saved by living below your means gives you options. Financial freedom isn't about having millions in the bank. It's about having choices and the ability to act without being shackled by financial constraints. Investing in appreciating assets. Once you've created positive cash flow and surplus savings, the next step is investing in assets that grow in value over time. Appreciating assets, like real estate, stocks, or even certain businesses, build wealth by increasing in value over the long term. For example, buying real estate in a developing area could mean that your property is worth significantly more in a few years, contributing to your overall net worth. It's equally important to avoid falling into the trap of investing in depreciating assets, like cars or luxury items, that lose value the moment you buy them. For example, when you finance a $20,000 car, the true cost might end up being $40,000 after interest, yet the car's resale value could plummet in the same time frame. Instead of sinking your money into something that loses value, focus on assets that grow and can provide you with income or a solid return on your investment. Every dollar you put into appreciating assets is a step toward financial freedom. The role of relationships in finance. Financial alignment is critical to the success of any long-term relationship. In fact, financial stress is one of the leading causes of tension in relationships, often surpassing issues like infidelity. When couples aren't on the same page financially, it creates a breeding ground for conflict and resentment. Mismanaged money can cause anxiety, blame, and distrust, all of which undermine the foundation of a healthy relationship. A shared philosophy about money can change everything. Couples who treat their finances as a collective responsibility, where both partners' incomes and spending decisions are made together, are more likely to experience harmony in their financial lives. Rather than each person handling money separately, treating income as shared wealth fosters unity. It reduces the yours versus mine mentality and helps ensure that both partners are working toward the same financial goals. Clear communication about spending, saving, and investing can prevent misunderstandings and keep financial stress at bay. Cash is king. In the world of finance, the phrase "cash is king" holds true. Cash gives you control. When you're able to pay for something in cash, whether it's a car, a home renovation, or even a smaller purchase, you hold all the power. You avoid debt and interest payments, and more importantly, you gain leverage in negotiations. For example, if you're buying a car that's priced at $25,000 and you walk into the dealership with $21,000 in cash, you have room to negotiate. Chances are, the dealer is more likely to lower the price for an immediate cash sale than if you were financing. When you pay in cash, you're often able to negotiate better deals because sellers value the certainty and speed of a cash transaction. Additionally, paying in cash ensures you avoid paying unnecessary interest over time, keeping more of your hard-earned money in your pocket. Long-term financial goals. Long-term success in personal finance depends on focusing your efforts on investments that generate consistent, reliable income over time. Cash-flowing assets, such as rental properties or dividend-paying stocks, are prime examples. These assets provide you with income on a regular basis while also appreciating in value, creating a double advantage. The more of these cash-generating investments you can accumulate, the more financially secure you become. In addition to traditional investments, consider finding ways to turn your current expenses into income-generating assets. For example, using your personal car to drive for a ride-sharing service can turn a vehicle, normally a depreciating asset, into something that pays for itself. This transforms an otherwise expensive necessity into a tool that contributes to your financial growth. Always be on the lookout for opportunities to turn everyday expenses into income. Financial education and small business opportunities. Financial education is one of the most important investments you can make in yourself. By continuously learning and improving your financial literacy, you set yourself up for better job opportunities, smarter investments, and overall financial growth. The more you know, the better equipped you are to make informed decisions that improve your financial standing. Additionally, don't overlook the potential in small business ventures. Starting or purchasing a small business, even with little experience, can be a major wealth-building strategy. For example, imagine taking over a small, struggling business like a barber shop. With some basic improvements, better customer service, increased efficiency, perhaps modernizing the space, you could turn a once-failing venture into a profitable one. Small businesses, when managed properly, can be incredible vehicles for building wealth and financial independence. Ultimately, financial happiness isn't about luck or hitting it big in the stock market. It's about taking control of your cash flow and making informed, strategic decisions. By living below your means, investing in appreciating assets, ensuring financial alignment in your relationships, and focusing on long-term goals, you can secure your financial future. Add in a commitment to continuous education and exploring small business opportunities, and you have a recipe for lasting financial success. By sticking to these principles, you won't just improve your bank balance, you'll reduce financial stress, open doors to new opportunities, and build the kind of wealth that supports a happy and fulfilling life. The journey to financial freedom begins with these simple, actionable steps.